Well, I looked at some research from Sean Farrell, who's our head of digital asset strategy, and he put out a presentation about Ethereum today. So he thinks the ratio of Ethereum to Bitcoin could go back to its 2021 highs, which is about 0.14. That would value Ethereum today at around 16,000, and it's currently 3,700.
4 weeks ago, we saw Tom Lee talk about his prediction for Ethereum by the end of this year. He said $16,000 is in the cards. The price of Ethereum at the time was $3,600. And today, the price is much higher at about $4,300. 3 days ago, a revised prediction was made by the chairman of BitMine, that is Tom Lee himself, saying that a $62,500 Ethereum could be in the cards. And a modest prediction of about 12,000 to about 22,000 was 100% in the cards as well. I wanted to go ahead and showcase what is going to probably be the most useful 10 minutes of your life if you want to go ahead and see it. Tom Lee talking about his thesis as one of the biggest holders of crypto in the world. BitMine right now is the second largest crypto treasury in the world with over $8 billion, quickly rising. It took MicroStrategy 1,000 days to hit the amount of capital that BitMine has raised. They are going ahead and accumulating Ethereum at a record pace. We've never seen this level of accumulation ever in the history of the crypto space. So why in the world is he so bullish? That's why I wanted to go over, and I also wanted to go ahead and give my thoughts in the end.
Ethereum is having this 1971 moment. And what do I mean by that? Well, there's a couple of things that happen. The Genius Act is creating the stage for a stablecoin boom, and I've covered this in the previous video. And SEC's Project Crypto is moving Wall Street onto the blockchain. Wall Street is going to financialize the entire system, the existing system of real-world assets onto the blockchain, but they're also going to create inefficiencies by itself moving their architecture onto the blockchain. So in our view, Ethereum is having its 1971 moment, where the real-world assets are becoming synthetic or tokenized. Treasury Secretary Bessent sees this becoming a multi-trillion-dollar market for stablecoins. And it's not just stablecoins, but banks are already moving to build products on Ethereum, whether it's JP Morgan, Robinhood, Goldman, Bank of New York, even Walmart and Amazon. So what does this mean? Well, in 2025, as the real world becomes digital, it's going to be natural to say, I want to find the digital store value, and that is Bitcoin. And I'm a believer in Bitcoin. But it's also going to create a market for digital assets. And we think the winner there is Ethereum. And in fact, Wall Street is building here on Ethereum. So let's just think about one story arc. What is Wall Street going to do to innovate on the blockchain over the next 10 to 15 years? Well, they're going to build stable coins, tokenize equities, credit, tokenize real estate. They're going to monetize reputation, even monetize intellectual property. And a lot of this is happening on Ethereum. For instance, this is a tweet from Adriano Feria that Ethereum added $6.3 billion of stablecoins just in the last 7 days. Well, that's more than half of all the stablecoins Solana has managed to capture in over the last 5 years. It's more than the entire stablecoin supply on Hyperliquid, and it's 35 times the amount of stablecoin circulating supply on Ripple. And the stablecoin supply in Ethereum is now $160 billion. That's double where it was about 18 months ago. So you can see Ethereum is the winner here. And Ethereum has captured the majority of the real world assets. They're all taking place mostly on Ethereum. And SharpLink's chairman, Joe Lubin, agrees. He says Wall Street will stake ETH because they currently pay for their infrastructure, and Ethereum will replace much of the many siloed stacks they operate. Again, you can see a lot of this is taking place on Ethereum. And it's not just Wall Street. AI is also building products on the blockchain. In fact, we think one of the big story arcs is that it's not just Wall Street building itself onto the blockchain. It's really AI converging onto Ethereum. One of the co-founders of Ethereum actually said this. He thinks Ethereum could be the key to AI decentralization and actually act as a decentralized partner in solving current problems with AI intelligence platforms. So what does that mean? Well, that means that you're going to monetize data collection, royalties, loyalty programs, verify agentic AI, and proof of humanity. That's also taking place on Ethereum. So you can see the future is quite bright. And that's why, we come back to this analysis by ethdigitaloil.com that Ethereum is productive. It essentially is the underlying token that's going to power both Wall Street and AI. And keep in mind, as you worry about supply, Ethereum's supply is growing below that of Bitcoin. And we also know as an asset class, if we think of Ethereum as digital oil, well, that's really what markets should be used to. From 1990 to 2018, ExxonMobil was one of the top 5 largest companies in the S&P 500, and it was always valued on a multiple of its price to oil reserves. So let's think about Ethereum's network value in that context. Well, here's Ethereum's price since 2018, and as you can see, there's 2 periods I'm shading here. These are called bases. And in Wyckoff's methodologies, they say the bigger the base, the bigger the breakout. And what they mean by that is that you're creating a lot of potential energy as a stock or a network asset bases, and then eventually leads to a breakout. Well, let's look at that breakout. In 2020, that breakout took place, and Ethereum went from $90 to $48.66, or 54 times increase. Well, the low point here in this base was $13.85. So with this breakout, we're expecting an upside move. Is it potentially 54x? I'm not sure, but that's what happened last time. Another way to think about Ethereum is the Ethereum to Bitcoin ratio. And in our view, the tailwinds I'm talking about argue for an all-time high in this ratio. The 8-year average Ethereum to Bitcoin ratio is 0.04790, and it's currently 0.04032, meaning we're below the long-term average. The all-time high in this ratio was 0.080727. Of course, it started off higher, but I'm talking about the 2021 all-time high. So we think that not only should Ethereum recover to the long-term average, it should probably get to the all-time high ratio and arguably exceed it as we start talking about Ethereum acting as the chain for both Wall Street to build its payment rails and the financial system, as well as AI. So let's think about what that means for price. So I have a grid here. On the left side is Bitcoin price levels, and then going across are various levels of the Ethereum to Bitcoin ratio. Our year-end target, this is from the Fundstrat side, for Bitcoin is $250,000. And if you look at the 8-year average, okay, then you can see the range of prices for Ethereum using this ratio and different levels of Bitcoin. And here's the 2021 high. And as you can see, at a $250,000 Bitcoin, you get to somewhere between $12,000 and $22,000 value per Ethereum token. But that's just a ratio recovery. If you look at the replacement cost of payment rails and the banking system, that gets you to an implied value of Ethereum of around 60,000. And that puts the ratio at roughly 0.2500 Ethereum to Bitcoin ratio. And as you can see, that's how you get to $62,000 per Ethereum token.
Now, that was the video for the most part. $62,000 was his huge ETH payment rail prediction. If you wanted an easier way to go ahead and break it down, what he's essentially saying is that right now, out of any time in history, Wall Street needs to change. Undoubtedly needs to change. We know that stocks, they've been going up for the longest time, but there needs to be a change in the way that the financial rails work. And a lot of it's going to be built on ETH. They have all the stablecoin volume. They have pretty much all of the innovation in crypto. It's all happening on Ethereum. I still remember back in 21 when I was looking into crypto and I was saying, you know what? I don't think Ethereum is going to be the big dog. The gas fees are getting ridiculous. There's no reason to hold Ethereum anymore. There's going to be a new player out there that just takes over and makes all of this irrelevant. And yet, everybody, even though that was the consensus play, ended up using Ethereum anyway. L2s came out, people flooded Ethereum based off L2s, and now all of a sudden everybody uses these L2s and Ethereum continues to go higher. Ethereum is pretty much the father of DeFi. And if you're bullish on tech stocks, if you're bullish on tech cryptos, then you've got to be bullish on Ethereum. And if right now the digital gold is Bitcoin, that same equivalent can be said with the stock market. The stock market equivalent is Ethereum. Ethereum is the stock market of the 1970s. And we knew, or at least we ended up finding out in today's terms, that the stock market ended up winning out. Yeah, gold hit all-time highs today, but at the end of the day, the stock market has an amplifier effect we can't even go ahead and comprehend at this point. It is so large. Everything runs off the stock market. Ethereum right now is at about $500 billion, and yet we look here, the biggest stablecoin is at $168 billion. Undoubtedly, stablecoins are going to grow. In fact, the time that I think the crypto space is mature is the time that stablecoins take over Bitcoin's all-time high market cap, which if we can assume a $250,000 Bitcoin, we can assume that the market cap of Bitcoin is about $4 trillion. We should see over $4 trillion worth of stablecoins in the crypto markets over the course of the next 5 or so years. That would represent an enormous and unprecedented level of growth. The amplifier effect, you know, if we looked at the BitMine chairman's price prediction, if we looked at Tom Lee's prediction here, he went ahead and said, I mean, we could see a 54x happen on Ethereum. We could see some insane price predictions. The ETH value potential is 14x from today's value. It is absolutely enormous. And I think you need to have these crazy visions. But I also think, like, if you're investing into crypto right now, you know, if you wait for a 13x on Ethereum, that is a massive risk. People like Tom Lee can go ahead and risk that because they just raise money and they can be the one to hold out whether or not the crypto goes up and down. The average person can't stomach that loss. If they lost $8 billion, that would be pretty catastrophic, but it wouldn't be the end of the world for them. He'd bounce back at some point. But if you lost your entire life savings, you wouldn't be able to stomach that. So I would say, you know, 10, 20% max of your portfolio at any given time should be dedicated to cryptocurrencies, such as, but not limited to, Ethereum. But the vision very much is there. I do think that Ethereum will have incredible growth over the course of the year of 2025. And I think that a lot of what he says, a lot of what Tom Lee is saying is exactly what's happening in the crypto markets today. So let me know your thoughts in the comments section. If you want to watch more videos, subscribe, and that's all.